Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst, Curtis Scouten, jumping into the charts on this Wednesday, August 3rd, 2022. Overall, it was a pretty impressive session for the markets. It was pretty much a broad-based rally. You did have a little bit of the energy weakness playing into part due to the fact that oil was down on the day. Natural gas was initially down and then it had an impressive rally, which we'll touch base on. But overall, discussing the S&P, the NASDAQ clearly led this rally. Many of the beaten down names popped. We've even seen a common trend where companies aren't even having these big blockbuster earnings, but since they're so discounted, they've been having these substantial pops as they report, whether they've beaten or not. We saw that with Google, we saw it with Microsoft, we've seen it with some smaller companies too. So clearly, big cap tech, this move has been more of a risk off move. So essentially there's less risk in the market, so therefore people are moving to more of those stocks that provide them more alpha over the short and long term. So discussing the S&P intraday action here, we're also going to go over the US 10-year, the dollar, gold, oil, nat gas, Bitcoin, and the Apple chart. Is very intriguing. So the S&P intraday action, this is our pre-market. We had a gap up in pre-market, a little bit of consolidation, another move up over here, more consolidation, and then the markets never ever really looked back after that mid-morning level and just started powering up. And then the last 3 hours, the late afternoon, you had this light float up consolidation, and this is due to the extremely thin and light volume in the overall market. And then in the last two candles and some post-market trading, you've had this massive dump down, followed by another dump that's trying to take out this low and close below. And essentially you're negating the last 3 hour float that happened intraday. So clearly there's some sellers stepping in now, and this is what we want to see since we are net short the market. I think the markets have had a tremendous move. You have to admire it and respect it. This is a classic bear market bounce. But looking at the S&P daily chart over here, one of the reasons the markets have sold off, and the interesting thing is if we flip back to the intraday, this key level around this 415, this green line, that is your daily gap fill that we just hit on this last candle over here. And look at this beautiful topping tail right off that gap fill, followed by an additional two confirmation candles to the downside. So that is clearly a massive level of technical resistance, and the beautiful thing is we filled that gap, which is what we were looking for. Now the charts can actually start to either make a serious move down or consolidate to make another move up, which at the moment, I think we're more favored to have at least a move down to this 406 level and change. That is a daily gap fill level on the S&P 500. So I think at the minimum, we can see a retrace back down to this level. The big question is, if you're a bull, you want to see this hold as technical support. You want to see a bounce off of this level and then an attempt to break out. So a bull scenario would be, what I think is going to happen is, you come down here, bounce off of this level. As if you were a bull in this market, and I'm not a bull right now, you would want to see it break through and now target the next gap fill zone up here. So if you're a bear, which is what I think is going to happen, is I think we're going to get that move down to the low range of this technical gap fill. We may get a small bounce, but then I ultimately think we're going to head lower on the chart. So that's kind of what I'm thinking for the markets, and there are some support levels along the way where we should get bounces. I don't think it's going to be a straight shot. This level is very significant on the charts because not only do you have your major pivot zone bottoms over here where you had this impeccable bounce, it was like almost a record bounce in terms of stocks making multi-day rallies to the upside without any downside breaks. And ultimately, so you're into that resistance. You're also into these pivot zones over here where you had this massive breakdown, almost this secondary retrace over here. And this zone here is interesting because the markets were holding this bullish consolidation until we had a surprise rate hike by the Swiss. And that sent the markets tumbling very drastically. And now we've retraced and recaptured basically this level. And the big question is, what's the consolidation going to be like? I think we're definitely going to get some consolidation back down to this low range, which just so happens to match up with this wide range green bar, the lows over here, which kept you in check during this consolidation. But that's the big question, is will we be able to hold this, arguably when there's more economic factors that are contributing to a worsening global state. So in this time, inflation was lower. In this time, your manufacturing PMIs were lower. Basically, this time your debt levels were still a little bit lower. You had more money in the system. So I think that since we're back at this same level with higher rates, higher inflation, more debt, arguably worse fundamentals, macroeconomic fundamentals, it finds it very difficult on a fundamental basis to find a reason for these markets to head higher. Now, that's never a guarantee that they're going to head lower or they're going to head higher. I'm simply trying to make a educated assumption based off of what the charts are reading right now in terms of the fact that we are into resistance. We have had worsening global conditions, and honestly, it will be interesting to see once we break out or break down from this level. I think we're going to have a clear decision once we break this level that the next down leg in the markets is going to presume. So let's take a look at the NASDAQ over here. So the QQQ. QQQ is into resistance. Notice how relatively on the S&P 500, you're right around this area still. You just filled this technical gap. So you can see how much higher the NASDAQ is in comparison, which shows you the relative strength of the tech industry that has been pushing the NASDAQ up a little bit more, giving it that extra alpha. So the S&P, if it was trading in the mirror image of the NASDAQ, it would roughly be around this 313, but you can clearly see the NASDAQ is down here. NASDAQ is running into this downsloping parallel channel. My line could be off a little bit, so you're arguably at the highs, near it, just about to kiss it. Ultimately, your next big resistance is going to be this technical gap fill around the 328, 329 level. And it'll be interesting to see if we can get through this wide range red bar. That is a big area of resistance on the NASDAQ. It does coincide with these pivots over here. This is your reversal zone where you had your breakdown and then your reversal up. Also these pivots over here. So that'll be a big level for the NASDAQ 100 and big cap tech. Let's take a look at the US 10-year. So yields were extremely volatile today. If we look at the intraday action on yields, you can see that yields popped up above this head and shoulders topping formation neckline, and then it just sold off all day. So if we flip to the daily chart on yields, that is a wild swing on yields. The fact that you recaptured it and then you closed below. Now the interesting thing is that this bullish engulfing candle is still a very powerful signal, and it should not be just written off with one additional downside day. The big question is, once we get this weekly close, where's this candle going to be? Are we going to be getting a weekly confirmation candle below that confirms this weekly breakdown? Or are we going to get a weekly close somehow to go back up there and recapture this trend line on a weekly basis, therefore negating the head and shoulders? So that's kind of the signals that I'm looking for. So it's taking it day by day. Obviously Thursday, Friday, we get 2 more candles, so we'll have a cleaner picture of what is to come. With yields initially rising, it did cause the dollar to pop. You can see it made a high all the way up here, almost near 107, and then it sold off just under the short-term daily 25-day moving average. But ultimately, it finished relatively flat. And the interesting thing is the markets rallied substantially when the dollar was had some strength early in the day. So that was interesting to see, and it was kind of your signal that potentially the dollar was going to roll over as the markets continue to grind higher, even though the dollar was up. Let's take a look at gold. Gold really didn't do too much. It was kind of up and then down and then flat, but it did finish positive on the day. Right now it's up just about 0.25% on the day, so clearly it has some consolidation to do before it breaks out. I think with this 1, 2, 3 days of consolidation, you're probably going to be looking for at least maybe 5 to 10 days of consolidation before making the next move up on gold. Let's take a look at oil. Oil is interesting. Let's pull up the WTI chart. So the WTI oil did have another down day today. Overall, it was down 3% on the day. So it's kind of contributing to that thesis that once again we're going to be paid out on our short trade. We are short via the SCO, so it's beautiful. I think we've shorted this now our 4th time basically on all these pops. We shorted over here, the retrace, shorted over here, shorted it back over here. So we are in the money. I think we're in the money somewhere in the range of 10 to 14% on our SEO, but I do think that this is definitely a bearish chart. You're getting that confirmation below the 200. Algos are going to switch, I think, in terms of having to be positioned on the long side of the trade, and it's just going to be this all of a sudden gobsmack in the face for the energy bulls that, like, how the hell did oil drop to 84? If it drops to sub $84, if we get a pierce through there, I might be interested in going long, because you've taken all of the premium out of the war, despite the war is still going on. So that's kind of the logic around it, is that, we've had this multi-month rallies, ups and downs in oil. The premium has been in oil, it's been out, it's been back in, it's been out, it's been back in, and now it's coming to the point where it's completely been negated, but the war is still transpiring and happening. And who's to say tensions can't escalate? I mean, you're hearing chatter about Nancy Pelosi, Taiwan, China. I don't think that's going to escalate right now, but it could. And it's all it takes is fear. But nonetheless, I think oil hits this 84 level at some point in time. I may cover the short just a little bit before there, sell our SEO just a little bit before, because markets tend to bullish price action in assets tend to be bought up before, and then bearish price actions tend to be bought up a little bit later. So let's just continue to monitor oil. If we take a look at natural gas was intriguing. I'm glad we covered our natural gas short, because look at this. We completely would have been out of we completely would have eaten up almost all of our profits on natural gas with the pop today. Natural gas had a 7.74% pop. At the highs, it was up over 10%. So that's really, really interesting to see, because you were down on the day initially looking to make a new lower low, and then you had this all of a sudden this reversal engulfing candle, and that's pretty bullish for natural gas. If it can hold this and close higher than the previous candle high over here, that's a very, very bullish candle for natural gas, and it does mean that potentially you could be forming another move to test this double top area. So I'm going to wait and see to short natural gas. There's a lot of people that are already shorting natural gas, but this could easily turn into some sort of a bullish pattern where this is kind of what I'm looking like. We've had this measured move from this low to this high. You had a bull flag kind of formation, this consolidation down, and then you had a pop to a new high. So I'm thinking we could have this same measured move from this low to this high. You're having this beautiful, consolidation. You can definitely call it consolidation. And now it looks to be that you're trying to make a pop higher. And that would be interesting to see if we yet again made a new high on natural gas, finally piercing that $10 region. Now I'm in the camp that maybe, just maybe, with winter and things popping up and more negative news headlines, maybe natural gas could pierce $10. Do I think it stays up there? No. Would I be shorting it up there? Yes, I would. Would I be shorting it up here, accumulating a small position here, accumulating a small position here, accumulating a small position up here? I absolutely would. But I certainly think that it's possible that now it could eventually have another measured move like this, where it has, markets like to move in symmetry. So that's what I'm just observing, is you've had a symmetrical measured move already, which gave us this short trade opportunity, which we already profited on. And now if we can get another an even better entry, when we just covered our position, a double-digit gain winner on KOLD not that long ago, it's just truly reading the charts and being nimble in the price action of these assets. Let's take a look at Bitcoin. Bitcoin's, the interesting thing about Bitcoin, I don't know why that didn't come up. So I'm just going to erase everything. So Bitcoin's playing very interesting. You are forming this bear flag. Let's not confuse anything over here. This is a traditional bear flag that's forming on Bitcoin. Here you can see that you had your move down. So that's clearly a beautiful inside bar bear flag. You also had it over here, where you formed it over here, and you broke down. So that's another bearish pattern. You had it over here as well, where you had this beautiful pattern of consolidation. This would be your flagpole. So you had multiple bear flags in Bitcoin along the way. And once again, Bitcoin is forming this classic bear flag. So the major pattern is bearish. I absolutely think we head much lower. My next target, once Bitcoin breaks that, I think there's going to be some intraday bounces, maybe some multi-day bounces over here. But our next sustained multi-week bounce, I think, is probably going to be around the 15,000 to about 13.8 here, somewhere in between these highs over here, this previous pivot and these pivots over here. So ultimately, I do think there's a lot more downside for Bitcoin. But in the short term, let's look at the short pattern. You are forming a little bit of this bullish consolidation that could potentially send Bitcoin breaking up. Your next big level of resistance, I think, is this pivot zone over here. It will also happen to probably coincide with the top of this channel. So if we simply move this up a little bit more, you can see that you could potentially get a move of Bitcoin all the way up to about, another 8 or 9% in Bitcoin, where you'll hit this pivot bottom over here and you'll hit the top of this parallel channel over here. So am I buying Bitcoin right now? No. One of the reasons I'm skeptical of Bitcoin is because I know these larger patterns can take a hold very quickly. And I know that we've had a pretty decent amount of consolidation in this bear flag pattern. It's been a few weeks now that we have consolidated for. Actually, more consolidation in this pattern over here versus this one that broke over here. So I'm not trying to get cute and try to play every bounce. I'm taking more of a risk analysis into approach every time we enter a trade, because that is key. You always want to pay attention to the macro pattern, the larger macro patterns. Despite being able to trade nimbly in the micro pattern, the shorter term patterns, you have to be aware of the timing aspects of the markets. And when I look at the markets, the S&P has ran into resistance, major resistance. The NASDAQ, all of these high-flying tech stocks have run into major resistance. We've had an impeccable move off the low in many names, which we've benefited from, but now we are net short because there is a timing aspect to this market where you can only rally for so long in a tightening cycle unless the Federal Reserve is starting to pump more money into the system, and they just haven't announced it yet. That would be the only scenario where I would say, okay, the markets can go higher. But until we hear differently, until they stop tightening, the markets are on borrowed time. There will be another down leg. So Bitcoin, it could go to this 25,000 level, but ultimately it could also fall, and that's roughly the same distance. You're at about a 50-50 right now in terms of where Bitcoin can go. And if you look at what happened here, this was arguably some interesting bullish price action where you had these initial moves up, consolidation, another sharp move up, and then you were consolidating. You had this nice consolidation pattern until you ended up breaking down over here, boom, and you went lower, and we actually bought down here, and it allowed us to profit from this trade. So right now, we're pretty much making this identical pattern in terms of Bitcoin, where we had this consolidation, you had a little up day, this candle ended up failing, you had to move down. So we'll know by tomorrow whether we get a secondary confirmation candle to the upside or we get a candle confirmation to the downside, which could look like this. So it's either a 50-50 right now in Bitcoin, which is why those odds are not good enough for us to be in a trade, despite there being potentially more upside in the charts. Let's take a look at the Apple chart. Apple's very interesting. We did add to our Apple short today. So let me just erase a few of these. So Apple again filled amazing key technical gap. I mean, just look at this move. This type of move over here looks very similar to this type of move. Despite fundamental market conditions and financial market conditions deteriorating even faster and more so, we're almost near the all-time highs on Apple. Apple's trading at 166, way above its 200-day moving average. You filled a key technical gap. You've smashed through resistance. That is exceptional price action on Apple. You've even recaptured this head and shoulders neckline where you traded and triggered. Now, you have not confirmed above it on a weekly basis yet, but there is that possibility that you do. Now, we're in the camp that Apple does head lower. Is there a possibility that it now could float up to fill up this gap at 174, which would also coincide with this original downsloping channel that Apple was trading? It absolutely could, but you have to respect this. Do you realize how much money a 29% move is on a $2.5 trillion company, that is an exceptional amount of money flow into this one stock alone, let alone all of the rest of the market. So we added at this technical gap fill. The charts are telling me to add. Our average is out of the money a little bit, but nonetheless, I do think Apple will come in sharply, and I still think there's a great shot and a highly probable shot that Apple hits $95 basically either by the end of this year or the end of Q1 2023. So I'm in the camp that tech is going to have an astonishing decline that is going to really, really blindside and catch a lot of people off guard. You know, we're almost at the levels where you had important influential people selling major stakes in the company at these highs. We're not far from those highs where those employees have sold massive stakes in the company, and they have not bought more yet. We have not had any file disclosing. So to maintain a market cap of now probably 2.7 trillion or 3 trillion, no, probably about 2.6 trillion, with market fundamental and GDP conditions contracting and PMIs contracting, we're almost at that level where PMIs below 50 is always an indication of a recession. So I think the markets have kind of been tricked and lulled into thinking we're not in a recession, despite all of the data showing we are in a recession. The recession is only going to get deeper. That's because our policy members like to change definitions of what is and what isn't a recession. So overall, I think the markets will have a rude awakening at some point in time, because these rallies have been nothing but fierce and powerful moves. And when you look at the trajectory of this move to this move, it's completely parabolic. And you look at the trajectory of this move to this move, at the same time, it's completely parabolic. If we simply had to throw up a trend angle on the daily chart of this Apple move, you know, we're talking about a 72-degree angle. To maintain a rally of 72 degrees is it eventually you hit the apex of that move, and it's basically impossible. I mean, this was an 84% move. That must have been some sort of a record. But to have these sharp moves up, they're generally and most likely followed by an even sharper move down and a bigger decline down. So we'll just have to wait and see what progresses over here, but the markets constantly surprise people, and this is nothing short of a bear market bounce. And congratulations on the profits that we've taken. Yet again, we're still our count is still growing. We're still banking profits. We sold YY for a beautiful 10.33%, so congrats over there. We sold Zoom only for 7.2, but it's still a profit in our pocket. And one of the reasons I'm taking so many of this, because I'm just astounded by this move in the S&P 500 and the NASDAQ, you know, without any major consolidation. Let's just see on the post-market hours. So again, look, you had that initial final 10-minute bar, which engulfed pretty much 3 hours of price action, followed up by an additional confirmation candle, which confirmed that downside move. You had a little bit of a buy the dip after hours, and now it's being met with another consolidation. So if we simply look at where support is, you will have support over here, which is not very far away. My opinion is that you do break through that support pretty quickly and ultimately head to this gap fill in the daily, which is around this 405 level. So that would put you at about basically a move of 1.96% down on the S&P 500. So let's continue to monitor things, how they go. There is a gap fill around 409. You may get a small intraday bounce there, but ultimately I do think the bounces will be faded from this point on. Up until the markets, you know, potentially could stage some sort of a consolidation on light volume to work off this overbought scenario. But I do think they have to have that pullback relatively soon, just due to the overbought nature of these markets. Thank you all for being members. Take care. We'll discuss more chart action tomorrow.